Okay, guys, good evening again, and welcome to this weekly commentaries. So, as our tradition, or the way I used to do it, we're just going to start first with the dollar index. The dollar index is like a roadmap to know the direction, or to be able to determine the direction of other foreign currency pairs like Euro USD and any pair that has US dollar either as a quote or as a base currency. So we're going to start with the dollar to be able to see its movement and then to be able to correlate it with other currency pairs. So starting at first, if you see on my screen here, I always say check your higher time frame for your IF first. So the most important thing for you to do is to check your institutional order flow. Where are the institutions driving price to? Okay, when you are able to get this correctly, then everything will come in easy at that time. Okay, if you are able to know where price is going to, you are able to determine the draw on liquidity mainly from a higher time frame, then you're going down to your lower time frames will just be to get entries and so on. Okay, so first let's just try to look at the monthly charts, and then from there we'll step down to see what price might want to do. Right, so price is still playing around this. Give me a second, spotlight. Okay, all right, so we still have price playing around this area here, spotlight this, around this zone after it filled this BC. When price fill this BC, this is what we've been having. Price has been accumulating, and we know that we still have this inefficiency up here that price might want to come into it before dropping down. Remember, our bias was for the XY. We actually want the XY to drop as this, clearing this equal lows. But if this low now is taken, that's when we're going to have a free fall on the XY right down to this, clearing these lows down here. But for now, we have this inefficiency here, and the close of last month. Okay, the close of last month was pretty bullish, which gives us an indication that we might want to see bullish price movements on the dollar index. Okay, but we have this inefficiency in view. So let me just quickly annotate that, and then we'll see. So we're going down to lower time frames. We're going to have these levels in mind. Okay, so we have our monthly CB here. Make it smaller. All right. So we have our monthly CB, and then when we try to zoom out here, you discover that when this candle, this monthly bullish candle, this monthly close this bullish, this candle down here now becomes a bullish order block. All right. So we're having a 1 month OB here. OB. So that's a 1 month OB that we have at this point. With the close of this candle here, we might want to see price trade lower. Remember, I always try to make you understand that when you're doing your analysis, you want to have if statements, right? You should not try to impose what you think will likely do on price, because when you have that mindset of imposing your view on price, when price is doing the opposite of what you're thinking, you will not be able to adapt to it. Okay, but for now, this is what we have here now. When I look at this price movement, all right, the close of this candle, I have this previous monthly high. Okay, this previous monthly high, it's going to be our sell invalidation for the moment. Okay, it's going to be our sell invalidation for the moment. Now, if price should take this previous monthly high, then we are coming into this inefficiency. Okay, nothing is going to stop price again. We are going to be coming up right up to this point to balance this inefficiency, and maybe we're going to come right into the 50% of the price of this price inefficiency around this point here. That means we're going to have around CE, something like that, around that area. CE here stands for consequent encroachment. Okay, so if the previous monthly high is taken, then price will want to trade up to this point. Okay, but if it is not taken, then we want to see price trade lower. Okay, trade lower, and then we continue the bearish move that we're expecting on the dollar. That's what we can see on the monthly chart for the moment. Okay, so let's go down now to like 1 week. Remember, this is what we are looking at on the monthly chart. We have our conditions laid out. If previous monthly high is taken, then price is likely to come up to this inefficiency, okay? And if it is not taken, if the high is defended, then price will want to trade lower. And then if it clears the previous monthly low, then we are going to have a free fall down to, first target will be this inefficiency here, will be this BC. That will be our first target, okay? If this previous monthly low should be taken, that will be our previous monthly low. A previous monthly low is taken, then this will be our first target, and then all this trend line phantom here, price will clear them with time. All right, this is the monthly chart, but this is not the chart as a day trader you are going to be focusing on, right? You just need to have a bigger picture of what to expect. So that's what we are likely expecting on the monthly chart. We have if statement, if price should take the high of the previous month, we are coming into the inefficiency. But if it is defended and price drops down, taking the low of the month, the previous month, then we are having a free fall down to this point. But now, inside this range, what can we be doing on the weekly chart? Let's go and then we'll see what we might be expecting here. Let's go down to the weekly chart. Okay. So now when we look at the weekly chart, right? When you look at the weekly chart here, we notice that we closed a contraction candle inside this 1 week order block. We have this 1 week OB. We have this 1 week order block. We close a contraction. We know after a contraction comes an expansion. Okay, so it is it's high probability to see price start dropping from this point. Okay, we can have something like this because of this close. We are expecting an expansion, right? But if now remember this previous monthly high is also the previous weekly high. So what that means is if price should take the high of this previous week, then we are coming to clear this high and so on until we come into the CE here, right? Likely clearing this high as well. This one. That will be a point of buy side liquidity. Okay, on the weekly chart. So if price should be taking the previous weekly high here, we are definitely going to take this one and then furthermore up to this point. But if that weekly high is defended, then we are going to be having an expansion down. So at this point, we're going to be expecting an expansion in two directions. Okay, having all the conditions laid. So which means from the weekly chart here, if the low of this contraction is taken out, then we are going to expect that free fall to clear these two equal lows here. Okay, we have these two equal lows sitting here, right? This is buy side liquidity sitting, sell side liquidity sitting under this low, right? So if the low of this is taken, we are going to expect a free fall expansion down to this point after this contraction. So we're going to be watching out this week, expecting for a sell program. We'll be expecting to see this high protected, all right? For a buy program, we'll be expecting price to violate this high and this should be protected as well. Okay, but let's go down to the daily, right? Because having this in mind, just looking at this on the weekly, there are going to be footprints on lower time frames that will give you a direction, like is the high is going to be taken, or is the previous weekly low going to be taken, or is the previous weekly high that is going to be taken, right? You can now determine that on your lower time frames. So let's go down now to the daily charts and we see what we have here. Okay. So this is what we have on the daily chart here. Thursday closed this much bearish, and then Friday price went back up bullish. There was a bullish push, and that came in from this other block here, from the daily order block, this other block. So we had that retracement from this daily OB. All right, that retracement came in from the daily order block, which pushed price back up to this bearish order block again from the daily chart. Okay, so this is actually going to act as a resistance to price. All right, let me just mark the range of that candle right here. Okay, so this zone here, we might want to see price do something around this area. If the sell program is going to work out, we want to see price play around this area and then drop lower. Okay, if it takes Friday's low, all this trend line liquidity here will be wiped out, and then to price drop down to the sell side liquidity we have aligned. Okay, but if this high is taken, then we'll expect price to continue bullish till it goes up to clear this. This will be the next target. Okay, This will be the next target. All right, because if this high is taken, then definitely this high as well is going to be taken, and this one as well. So that's what we're expecting here on the daily chart. We want to see price play around this area and then continue to drop. If today, if price opens, maybe Monday creates the high of the week and then it expands lower, Friday or Thursday or Wednesday creates the low of the week and something like that. And then the next week we try to continue lower. All right, but Monday, we are going to actually want to see how price is going to play out so that we know what to expect throughout the week. Okay, but if Monday should open trades higher to clear this buy side liquidity, we might want to see a retracement and then a continued push to the upside. But if it is defended, if this high previous weekly high is defended and the previous weekly low is taken out, then we want to see price drop lower. So let's check 4 hour and see what might happen. Okay. So looking at it on the 4 hour, we were having a bullish structure here. Price was making higher highs and higher lows, higher highs and higher lows until now we had a break of structure here, right? We have had a clean break of structure to the downside, which means 4 hour is already suggesting a down program, a bearish program for us, right? So around this area, we might want to see price try to create another new lower low and then continue like that. So 4 hour here is already bearish, but our daily is still yet to be bearish and our weekly as well. If price should take the previous weekly low as we aligned on the weekly chart, then weekly becomes bearish. All right, same thing with the daily. Daily becomes bearish at that point, but 4 hour here is already bearish. Okay, but if these three things should align, then we're going to have a high probability trade for price to drop down to that point. So for the fact that we all have different trading methods or trade entry techniques, this is a zone that we want to be interested in actually selling. All right, for the moment I'm more inclined to selling at this time. All right, but if price takes this high, okay, if price takes the previous weekly high, then we want to now see areas where we can want to take our buy trades from. Okay, but for the moment we want to see how price play out around this spread. It should give us some signatures on the 15-minute charts that clears break of structure and so on. Because when you go to the 15-minute chart, if you go to the 15-minute chart, you'll notice that actually at this point, at this level here, price was already in an uptrend. Okay, price is in an uptrend. So we want to see a structure shift from 15-minute before we start to getting our entries. All right. So remember that when price tapped into the daily bullish order block, this one as I aligned, this is the signature we had. Okay, in the community we had some buys from here, so which means that when price tapped the daily order block, we had this signature here, right? Optimal trade entry, and then you go long. Now, this is the same fractal nature of price we want to see at this point, this shaded portion. So we want to see price play around this area, should play around this area, and then so it gives us a signature. We're going to start looking for bearish movements. But if it doesn't, we're going to stay still and wait for price to clear this high. If it does not, that's when we're going to confirm all that we are going to be bullish. But remember, we have to be flexible, okay? You have to be flexible when you are doing your analysis. Very, very flexible, because I mean, flexibility is at the core of this thing we are doing here, okay? You don't be too tied to your analysis in a way that price will be doing the opposite and you will not be able to flow with the price delivery. Like for example, if to say you were so much tight in selling here, okay, you were so much bearish on the dollar last week, to an extent that price was giving you a break of structure here, you will not actually want to accept this as a break of structure if you were not flexible enough, right? So it is good to be flexible when you are doing your analysis, okay? So if price should do whatsoever we want to see here, it gives us a sell program, we're going to engage and we look forward to sell price right down. So let me just go back to the daily charts. I think we have explained so much on higher time frames already. This is what we're expecting. Price should likely from here drop lower. Okay, we have fair value gap here, and then this buy side liquidity. Okay, if price should respect this, now remember I said if this low is taken, daily becomes bearish, weekly becomes bearish. All right, but 4 hour is already bearish. If this high is taken, that invalidates selling for the moment. We're going to wait till, if this high is taken, if you are just so much inclined in selling, you will want to wait till you see any sales sponsorship coming in again. Then if this high is taken, I want to see price go a little bit higher, clearing this buy side liquidity and so on, all this trend line phantom here. Okay. So that's what we have on the dollar index. Let's add a chart for euro, and then we'll try to compare them two together. So this is euro on my right, and on the daily chart, you can see it's similar. It's just exactly the opposite of what the dollar is doing. All right. So no, this is looks like, okay, the same chart. Let me put euro USD on this other one. Euro USD. Okay, so this is euro USD here. Let me just delete this. Okay, let's have this deleted. Now we have been bearish on euro USD right down to this key level. If we should go back to the weekly chart here on euro USD, you notice the same thing. All right, we outlined a weekly order block on the dollar, which is this one. Okay, so let me just copy that and then we paste it here. So this is that's for the dollar. Let me just bring it down. This is the same weekly bullish order block here. On dollar is a bearish order block. On euro, we are having better bullish order block. So this reaction is from this zone. And then just looking at the weekly again here, we had this volume imbalance, which price traded right down to it. And if we go to the daily on this same euro USD, we had okay, we had this. This is also our bullish order block. Okay, so this reaction yesterday happened because of this key level, this volume gap from the weekly. All right, and then which is also conferencing with the bullish order block. All right, so this is what we are having on euro USD, and then price started selling from Friday as a retest to this bearish order block. That was a retest to that bearish order block, caused price to sell back down. So if we want to compare the opposite of what we are seeing on the dollar here, we want to see price react from here and then go back to clear the buy side liquidity. Okay, we want to see price go back to clearing the buy side liquidity from here. But if that doesn't happen, if price should clear this low, this is a trend line phantom here, price will come down for that. And our first target, this will be the first target, second, third, fourth, and then this BC is going to be the sixth target. Okay, BC. That's our BC on the daily chart. So if this low is taken out, okay, this low, we're going to have a free fall down to this point. Same as here. If this one is taken, you know that definitely price is coming down to this one. So we just want to see reaction of price here on, let's go to the 4 hour on the dollar and see, on euro, and see what is going on here. Now, like I said too, it's the same thing here on euro. We have been in a sell program on euro, clean bearish trend, creating lower lows and lower highs, and then we already had a structure shift on the 4 hour. So 4 hour is already giving us a bullish shift. Okay, but like I explained here on the daily, on dollar, we are still expecting the daily and the weekly to turn bullish, all right, before everything is aligned, so that we can now be talking about high probability trade setups. Okay, so this is what we have on euro, and then on euro we have this inefficiency, we have this BC. Okay, we have this BC. So should we see price reacting from there, then we're going to be looking for buy entries from there. That's our BC from the 4 hour chart after we had this break of structure here. Okay, so after this BMS, we have this break of structure. I mean, after this BMS, we have prices almost into this fair value gap, and then looking at it, we see the weekly charts. I mean, the weekly order block, we have this 4 hour also nested just on the weekly order block and the volume gap. So this is going to be our buy invalidation for 4 hours chart. Okay, that's going to be our invalidation zone. invalidation. Oh, sorry about that. That's going to be our invalidation, bottom and then right. Okay, this is going to be our invalidation zone. Price should actually not take this low, right? Breaking this other block here. If we should take this low, then we might want to see price drop lower to clear this sell side liquidity here. Okay, so that's what we're expecting on fiber, which is Euro USD. Okay, so let's open cable here, GBPUSD, and then we'll see what price is doing from there. So same thing, let's just start from the daily chart. Remember that anything that we are looking at here, we're trying to correlate it with the dollar index, okay? Because if the dollar is strong, then foreign currency pairs will be weak. If the dollar is weak, then foreign currency pairs will likely be strong or bullish, okay? They will likely be having a bullish move. So looking at cable, all this week we have been bullish. This was Friday, Thursday, Wednesday, Tuesday, and Monday. All right, Tuesday created the low of the week, and then Friday created the high of the week. And till then, price did not take this high. So we're having equal highs sitting right up here. Now, let me just quickly, let's look at the weekly chart for this. Let's look at the weekly chart here. It's something interesting. Okay. So this is the weekly chart here. Price took the previous weekly high. Okay. All right. So monthly CB here was filled, and we still have this one up here. So if price, the dollar is going to be bearish as we outline, then the XY cable might want to trade up into this BC here. Okay, seeing this as some type of relative equal highs. So price might want to come back up, clear these highs, and trade into this fair value gap, retesting this other block here as well. So looking at this, we're going to have something like this. We're going to put our invalidations here intact. Okay, our invalidations, if price should take this low, then we're definitely not going to that other block yet. We're going to be dropping down to clearing this sell side liquidity here. Okay, but with the close of this week, I'm expecting price to actually push further up. Okay, so which means we'll be going down. If we go down to the daily chart, we'll just try to define our range. This is our range low and our range high. If you draw our Fibonacci from this bottom to this top, okay, we are likely having price. Let's go like okay, all right. So we might want to see price retest this 2-day order block. Okay, these two bearish candles, we're going to be like, oh my god, people are still going. So we might have a retest like this, and then price continue the bullish nature. But if this is taken, then we're going down. All right, so we want to see price defend that at this point, and then it continue up maybe to this bullish fair value gap, to this CB. All right, that's what we have on Euro USD and GBP USD. All right, let's look at CADJPY. Okay. Let's just quickly look at CADJPY to see what is going on. All right, so CADJPY has been so much bullish. All right, so we're expecting price to come right up to filling this imbalance, which is also the monthly. Is that also the monthly BC? No. The monthly order block. So price already filled the fair value gap here, and we're expecting price to come up to the daily or monthly order block. And just before that, just slightly to the order block, we have this fair value gap from the daily chart, right? So we're expecting CADJPY to continue that bullish move. All right, order flow is bullish, so we're expecting price to continue that bullish nature into this fair value gap. All right, so We have this as our bullish order block. If Monday should not tap this, maybe we'll close like contraction candle, leaving a fair value gap down, and then the next day we'll open, fill the fair value gap, and then we'll tap into that before we start to see a long bearish move coming in from that monthly order block. Okay, so that's what we are expecting. Remember, all this zone here, all this zone base is just the monthly order block. So this inefficiency can likely be filled as well. But if we have a move here, if we start to see a bearish structure shift, then this will not be filled. Okay, but if price will just blast through it, clearing this high, then we're definitely coming in to this inefficiency here. Remember, it's still within the monthly order block. Right, so normally if price is to react to a monthly order block, you don't expect it to just react one day and then start selling off. It's going to play around for some days. All right, so that's what we're expecting on CADJPY as well. I think that's all for the currency pairs that we are so much interested in trading. Anyway, you can unmute yourself now and then you ask a question or anything you don't understand. You can ask a question and then I briefly give you the answer. That will be just for 5 minutes, right? And then we'll go for a short break. You can unmute yourself now.
Thank you, sir. Good evening.
Yeah, good evening.
Yeah, I follow up. I think I'm okay from my end. I don't have a question. Thank you for the explanation.
All right, great. That's great. Any more questions? We have 5 minutes for that before we go for a short break. How many of you are trading gold? Nobody's trading gold. I think on the last.
I'm trading gold.
Okay, I think on the last. All right. Last weekly commentaries we talked on gold. We're expecting gold to drop down to this fair value gap and then go back up to clearing all this buy side liquidity here. All right, so last week closed a contraction candle. We're expecting an expansion. Okay, maybe we're gonna expect a deeper expansion down to this fair value gap before we have a push up. But now, if dollar is going to sell as we're expecting, right? This expansion might be to the both side, to the upside. But so at this point, we're going to see what to expect. We're going to see if we see bullish signatures forming from here, then we're going to have a huge expansion to clearing all this buy side liquidity that's sitting here. Okay, that's actually a lot of liquidity has been built up on this buy side liquidity, buy side liquidity, buy side liquidity. So around this area, we're going to be pushing up. But now the field of this BC here, it's what I'm more interested in. Like with the close of this contraction candle, it could be that will open. All right, it could be that this week price will expand lower, maybe reject now from around the consequent encroachment of this fair value gap, and then we go up bullish. Let's check daily time frame to see what that might look like. Okay, exactly. Now, with the close of this Friday, that gives us that probability to see that price might really want to come down deeper into this fair value gap, right? All this inefficiency here. Though price filled this on the daily, we still have this fair value gap down here as well, but I wouldn't really want to see price trade this much lower before pushing back up. But let's see, let's draw our Fibonacci from this bottom right up to that. So around this area, we're having a good optimal trade entry, okay, around this zone. So we just want to see price play around here, play around this area, and then we go back, we expand heavily to the upside to clear all this buy side liquidity. Okay, so but remember, from internal range to internal to external, that's how the market books. Okay, price after price clears all this trend line phantom here, then we're going to have a huge expansion back to the upside, and it might look something like this. Let me just do something here. Let's try to see something here. Okay, we might want to have something like this from here to here. Okay, something like that. to form. Let me use open and close. Let's use a different color. Okay. You might want to see something like this. Okay. Maybe price should trade lower. Okay, and then we'll see this same nature of price movement here forming here again, clearing the buy side liquidity. Okay, something that we might expect like that. Then price clears the buy side liquidity in that sense, something like that. So let's see how Monday opens. I mean, how Monday trades. But now, if you know that price has already filled the weekly, okay, we have already had a tap into the fair value gap. So if price should take this Monday, this high, then we are going to go right up to the buy side liquidity. But if it doesn't, we'll come down here before we go right back up there. So that's it. We are out of time, guys. Thank you for joining this.